Good evening, TheoTrade. This is Coy Roseblumen, watching the Theo Nightly video for the 26th of November, 2019, and we have a new all-time high. It is holiday tape, it is holiday week, and we have the typical low volume and bullish holiday drift. As we've been talking in the afternoon chats, the market can be levitated or floated to the upside when you have holiday tape. Well, that's now. And Thanksgiving, or this end of November week, tends to be bullish more than not. It's the same thing with the end of December, which is the Santa Claus rally. So we are seeing that in this year, 2019. The only problem is we saw drift ahead of the Thanksgiving rally. Normally, you'll see November pull back a little bit, trade a little bit to the downside, be weak off the first few trading weeks of the month, and then strengthen in this bullish holiday drift. Well, that didn't happen. So again, here we are with the S&P at new, fresh, all-time highs. We'll take a look beneath the market in some sectors and, of course, take a look at the broader picture. Nevertheless, a market melt up is among us and is actually propelling price even higher with the stop losses, and there's a lot of them triggering, because you can see on the hourly chart or this intraday or the daily chart where we see gap and goes, trend day, trend day, trend day, trend day. So all these things, again, markets are moved by supply and demand. They aren't moved by indicators or anything else fancy like that. If there's more aggressive buyers than sellers, the market goes up. If the short sellers put on positions, as would be logical and as was recommended, then the market takes out and makes new highs and actually triggers any stop losses, then the market goes higher. So that is the underlying dynamic about why we're seeing extended action in the futures, in the equity markets, and of course stocks in general. So the Nasdaq did break above 8,400, held support recently on a bull flag. Despite being somewhat of a narrow pullback, it still was a pullback to initially trade of a flag maneuver up away from this 8250 level. In the Dow mini futures, we do see a triangle breakout. That has taken us above 28,000 in the Dow. Now, most traders, if they don't look at the S&P, or if they're just watching the news or general headline news, they'll take a look at the Dow and see it up above 28,000, and that's a bullish sign. Again, not to be outdone here, but we are seeing bullish volume divergences and some bear volume picking up. But in general, this is a bullish time of the year. The big news, I think, beyond everything else, is that the Russell Index did break above its 1600 pivot point. So that is not a new all-time high, but certainly a new 2019 high. If we pull back the perspective in this holiday week to the weekly chart, that Russell still has room to go to the new all-time high if that is to occur. In reverse order, the Dow mini futures, we can see how price can extend a holiday run. This is that alternate thesis or the unexpected lower probability play that may be occurring into the end of 2019. So instead of the other years, we just look at 2017 for this into November, flat couple of months, a couple of weeks, and a bullish end of the year. Zooming in, we can see November, bull, bull, flat, flat, and here's your turkey rally. The Thanksgiving rally was in these two bars, and then Christmas or the holiday rally took us into the end of the year. And that January was right there before the drop. Nevertheless, we had a strong January, February 2019, and at this point, strong close of the year. So that's the weekly perspective. The Nasdaq continues to break and extend all-time highs, and back to the S&P futures, same picture. On the sector notes, we'll take a look at that from the daily perspective and just ask the question, where's money flowing? Are they in the offensive sectors, which are up here, or the defensive sectors, which are down here? And for clarity, these are the XLF financials, K technology, and Y consumer discretionary. Down at the bottom, the inverse or the mirror of XLY, which is the consumer staples. That's food and drink and cosmetics, things you have to have, whether it's a bull or bear market or good or bad economic times. We can go without that new TV model. We can go without that vacation. We can't go without toothpaste. I hope we don't, at least. So that's the difference in staples and the consumer discretionary or retail names. Now, this is the one that's getting, I think, a lot of attention. It is XLV, which is healthcare. That has broken above our multi-month triangle and extended to new highs. We'll take a look at that later. And on the other side, we have had a pullback, retracement, or sell swing in utilities, which acts a little bit like the bond market. We can also see it like this as TLT, and it behaves a little bit like the bonds themselves. Speaking of, let's take a look at that XLV, because that's going to be our healthcare sector where a little bit of hidden strength, or if you're looking at just the indices themselves, you might be missing these pictures. We always want to see that at TheoTrade. Always look behind the scenes for opportunities, stocks or sectors or groups of stocks on the move that the broader public isn't seeing. And that can lead to opportunities for us. And the breakout, range contraction, low to high, the chop, and converging trend lines did give way to a range expansion or bullish breakout. This time, unlike the broader market, on high volume. So for any type of bullish plays or hedges or option positions, we might want to take a look at healthcare stocks. Look within the XLV sector to get some of those candidates. We always want to take a look at XLF because that's financials, and XLK, which is technology. If we extend our trend line, we see just nothing out of the ordinary and nothing that is outside the realm of this concept that the market's overbought, into resistance, divergent, and that should lead to a pullback. But that pullback just doesn't seem to occur. So that is where we are on the bigger picture with financials. We have traveled up away from the buy point at 27, up to the target point, 28.50, and we've extended on a breakout all the way right now, at least to 30 per share. And so that is the XLF financials. And they similarly, on a daily chart, look bullish. On a weekly chart, they are a little bit beneath the 2018 high. So this has been a bull market wakening up, or awakening, pushing up toward that all-time high. Contrast that just quickly with the SPY, and you'll see that the broader market is above, well above actually, the 2018 highs. And financials are not. And then XLK is technology. We had the bear wedge in 2018, and then the bull market really off the chart, really just a few weeks here of downside activity in the technology sector. That's helped in broad part by Facebook and Google and Amazon and just different little Microsoft. That's a stock that doesn't seem to give up any ground either. And just naming a couple of names there. So Microsoft, just like everything else, seems to be up into upper resistance trend lines, but bullish opportunities and this pulling it back to out of theory into practice. And an uptrend, we want to put on positions or buy options, calls, verticals, in out spreads, some type of risk on position when the market pulls back to rising trend lines or rising moving averages. That's true in Microsoft and other stocks. It is a holiday week. There is an upside drift. There's bull play, so it is what it is. We as traders take what we see, follow the price, put our opinion back as far as we can, and just focus on where price is going and play the probabilities from there. And realizing that sometimes extended runs or short squeeze activities occur because the market surprises people and therefore pushes them to stop out, which makes the market go even higher. So that's a concept taking place now. We do have a Thanksgiving week. We do have a holiday here coming up on Thursday and a half trading session Friday. In the absence of volume and volatility and traders at their positions or at their desks, we can still see this bullish drift continue. That may change at the start of December, but we certainly have the remainder of November, which only is a few more trading sessions. Always watch the price, trend lines, and guard open position profit, or think about rolling out any type of verticals that may be in a losing position. Push that off a month, maybe 2 months, and we'll see how those positions play out as well. As always, be careful and stay safe. This is Corey Rosenblum with your Theo Nightly video for November 26th, 2019.